For decades, China's property market has kept rising, showing strong performance and reaching its peak in 2021. In 2021, the real estate sector generated 7.8 trillion yuan, which is around 6.9% of China's total GDP. Property serves not only as a place to live, but also as an investment. In China, the Chinese stock market has historically been relatively volatile and prone to sudden fluctuations, making it less attractive to many investors. On the other hand, property has started to attract investors' attention as it is perceived as a more stable and reliable investment option. Consequently, the property market has been expanding rapidly over the last 2 decades. Developers continue to build more housing and create more projects. However, nowadays, the whole market has become overextended, where the housing supply exceeds the demand significantly. Therefore, we can see that the property market in China has become a bubble waiting to burst. So, how did we end up like this? Chinese property companies have accumulated significant amounts of debt due to aggressive expansion and land acquisitions. Many developers chose to borrow money to generate enough funds. Unfortunately, most of them were overly optimistic about the property market's future. From 2022 onwards, the property market experienced significant setbacks. Construction starts last year fell to their lowest level since 2006, only reaching 637.4 million square meters. Additionally, property developers didn't have enough sales to generate sufficient cash flows to meet their debt obligations. As a result, these developers may have to face liquidation, similar to what happened with Evergrande. This not only has a negative effect on China's economy, but also raises concerns about China's property market. In fact, it has led to another significant problem in China, called the rotten tail buildings. Developers start construction on projects without securing sufficient funding, so when they face financial difficulties, they are unable to support ongoing construction, resulting in many unfinished buildings across China. Another factor contributing to the crisis is oversupply. The past growth of the property market led developers to be confident about the future, believing that the market was not yet saturated. However, the reality is that the property market started to shrink during COVID-19. Buyers have weak confidence and low demand for housing, which is evident from the sales data. According to data published by the Bureau of Statistics and Fitch Ratings, China's property sales were 18.2 trillion yuan in 2021, but it has decreased to 11.5 trillion yuan now. The phenomenon of ghost cities has emerged, with entire new developments sitting empty and unoccupied, serving as a stark reminder of the oversupply in the market. To address the property market crisis, the Chinese government launched the 3 Red Lines policy in August 2020. This policy primarily limits developers' liabilities and ensures that they maintain sufficient reserves, preventing developers from accumulating debt they cannot afford. Moreover, the Chinese government has implemented measures to encourage property purchases, aiming to stimulate demand. These measures include eased restrictions on the classification of first home buyers, lowered existing first home loan rates, and extended tax incentives. As China grapples with its property market crisis, the fate of millions of homeowners and investors hangs in the balance. But as the world's second-largest economy, China still has enough capital to support the property market.